Two huge computer meltdowns. One, shutting down the New York Stock Exchange for 3 long hours. The other, grounding flights across the country, and officials say they are not related.
Well, there is also no sign that either case is a case of terrorism. But tonight, the New York Stock Exchange is still struggling to explain why it had to shut down trading without any warning to traders. Jon Keller joins us now. And John, doesn't help. This came at a very bumpy time for global markets.
Oh, it certainly did, Paula and David. It was already white-knuckle time due to worries about the financial crisis in Europe over Greece's unpaid debts. And today's trading outage in New York came just hours after major losses in the Chinese stock markets. More than enough to get even the smallest investor wondering, what does this mean to me? It started out normally enough, but by late morning, the floor of the New York Stock Exchange was bustle-free, an unprecedented shutdown that lasted almost 4 hours.
Our security posture is continually evolving.
The White House reported no evidence of hacking, but that was cold comfort for investors already spooked by a rash of bad economic headlines from Europe to China and beyond.
As an individual investor, if you're looking at this and saying, what's going to happen to my 401k because the New York Stock Exchange can't trade today? Right. Nothing's really going to happen.
And market expert Art Hogan of Boston's Wunderlich Securities says the collapse of China's stock market bubble needn't panic U.S. investors because their trading is short-term and less connected than ours to national economic health.
A halt on the New York Stock Exchange, what's going on in Greece, Puerto Rico defaulting on some debt, the Chinese stock market being in a bubble, all sorts of things can make noise around the edges, but at the end of the day, if you've got the right asset allocation model, you're looking in the long run, you'll probably be okay.
But in that long run, says Hogan, the Greek crisis is a symptom of deeper problems that bear close watching.
There's a lot of volatility in the market. You know, there hasn't been over the last 2 years. So when you think about volatility, if you don't have the stomach for that and you're over-allocated to stocks, perhaps it's time to pare that back.
Now, for those of us who've nursed our nest eggs through the economic downturn after 9/11 and the system-wide collapse of 2008, volatile is an unwelcome adjective. Given that recent history, Hogan's advice seems wise. The sky may not be falling, but now's a good time to make sure you've got a sturdy umbrella. And maybe a hard hat, too, Paula.
Got to be in it for the long haul. Jon Keller, thanks so much. And when the day ended on Wall Street, the Dow closed down 262 points, but you can only blame part of that on the computer crash. The Dow was already down 146 when trading was suspended. And this is interesting. Take a look at this. Here's a good illustration of what happened when the market shut down. Every blue dot is a trade on the New York Stock Exchange, so you can see exactly where trading was suspended and then when it restarted.